Ever wondered who's getting rich from the AI boom while everyone else blindly piles into Nvidia and Microsoft? Here's the crazy part. The most reliable money isn't in flashy algorithms at all. It's in the concrete, copper, and cooling systems that make those algorithms possible. Miss this layer and you miss the entire $1 trillion upside that powers every chatbot and self-driving car. In the next few minutes, you'll meet the one little-known stock that's building the AI empire brick by brick, complete with a $1.2 billion backlog nobody on CNBC is talking about. Stick around, because by the end, you'll see why this boring construction name could outperform the very tech giants it supports. Let's be real. The AI investment world is a circus right now. All eyes are on the same handful of celebrity tech stocks, Nvidia, Microsoft, Google, and hey, they're fantastic companies, no doubt. But when everyone rushes to the same side of the boat, things get a little shaky. Valuations are stretched to frankly insane levels, and the pressure to perform is suffocating. It feels like showing up to a gold rush after all the easy gold has been scooped up. This is where smart investors start looking past the hype. It's time to use the old picks and shovels strategy. Think about it. During the 1849 gold rush, the people who made the most consistent money weren't the prospectors who usually went bust. It was the folks selling the picks, shovels, and blue jeans. They sold the essential gear everyone needed no matter who struck it rich. In today's AI gold rush, the chips and software are the high-risk prospectors. But who's selling the shovels? Or even better, who's building the mines themselves? It's the real, tangible foundation of this whole thing. AI needs a staggering amount of power and data processing, which happens in data centers. These massive, secure, power-hungry warehouses packed with servers. The demand for these buildings is exploding like nothing we've ever seen. Boring side of AI that Wall Street tends to ignore. They love the glamour of a new algorithm, yet less excited about concrete, steel, and electrical work. That's where we find our opening, because the company that dominates this space is laying the physical groundwork for the next decade of tech, and its books are already full. So, what is this mystery company? Not some trendy startup from Silicon Valley. Decades-old infrastructure firm that has brilliantly pivoted to become a giant in the most critical construction sector on Earth. The company is Sterling Infrastructure. The ticker is STRL. Now, before you click away because I said infrastructure, just hear me out. Isn't your grandpa's construction company building highways? Though they do that too. Sterling has strategically reinvented itself to focus on what it calls e-infrastructure. This is the high-tech, high-profit work of building the complex facilities that power our digital world. We're talking data centers for tech giants, cutting-edge factories for semiconductor companies, and huge logistics centers. And that shift has been a game changer. Their e-infrastructure division is now their #1 growth engine. In the first quarter of 2025 alone, it made up 51% of the company's total revenue. Why does that matter? Because data centers aren't just big sheds. They're some of the most complex construction projects in the world, needing special expertise in site development, massive power grids, and cooling systems. As AI gets more powerful, the data centers it needs to get even more demanding. Sterling has set itself up as the go-to expert for these critical projects. They have the size, the reputation, and the ability to get these complex jobs done on time, which is everything to their big tech clients. This is where the story gets compelling. For a company like this, the single most important number is its backlog. The backlog is contracted, guaranteeing work for the future. It's the clearest crystal ball you can get for future revenue. And Sterling's backlog is just incredible. As of the first quarter of 2025, Sterling's e-infrastructure backlog had rocketed to over $1.2 billion. That's a 27% jump from the year before. Let that sink in. The company has over $1 billion in high-tech construction jobs already locked in. And get this, a huge chunk of that backlog, over 65%, is specifically for building data centers. This isn't a company just hoping to catch the AI wave. They are the ones building the wave itself. The financials tell the same story. In the first quarter of 2025, Sterling's earnings per share shot up an incredible 29.4% from the previous year. This wasn't a fluke. The results were so good that the company confidently raised its full-year forecast for 2025 and is now expecting impressive growth between 18.5% and 25.5% for the year. This isn't just growth, it's profitable growth. The profit margins in their e-infrastructure work have expanded to 23% as they take on these more complex, higher-value projects. Analysts are catching on. D.A. Davidson recently confirmed their buy rating on the stock, and the Wall Street consensus is a strong buy as they recognize the company is in the perfect spot to ride these massive tailwinds. And Sterling isn't sitting still. Just this past June in 2025, they announced they were buying CEC Facilities Group, a specialized electrical contractor, for $505 million. CEC's specialty is the mission-critical electrical systems inside data centers and semiconductor plants. This move is brilliant. It lets Sterling offer a more complete, all-in-one solution to its clients, making its competitive advantage even stronger and allowing it to capture more profit from every single project. Before we get into the risks and my final take, drop a comment below and let me know if you own any picks and shovels AI plays in your portfolio. And if you're getting value from this deep dive into a company that's flying under the radar, do me a solid and hit that like button. All right, let's talk risks, because no investment is a sure thing. Sterling is still in the construction business, which means it can be sensitive to the overall economy. A big slowdown, permitting delays, or a spike in material costs could squeeze their profits. And while Sterling is a leader, they aren't the only game in town. They do compete with other large firms for these huge contracts. But this is where Sterling's real advantage, its moat, comes into play. You can't just hire any contractor to build a multi-million square foot data center for a tech titan. It takes a ton of capital, specialized gear, and a history of proven success. Sterling's deep experience in huge civil projects gives them the credibility that a new competitor just can't buy. Their recent acquisition of CEC makes that expertise even deeper, and their sales pitch that much stronger. Plus, their established relationships with some of the biggest tech and manufacturing companies in the world create a very sticky business model. The bottom line is the barrier to entry here is incredibly high, which helps protect Sterling's leadership position. So let's wrap this up. While most investors are chasing the hype of the next AI software model, Sterling Infrastructure is quietly pouring the foundation for the entire industry. They have brilliantly pivoted their business to grab the lion's share of the data center construction boom. The investment thesis here is powerful and clear. First, they are a direct physical winner of the AI revolution, a pure picks and shovels play. Second, that stunning $1.2 billion e-infrastructure backlog gives them incredible visibility into future revenue and lowers the risk. Third, their financials are outstanding, with soaring earnings and fatter margins that prove the strategy is working. And finally, they're getting even stronger through smart acquisitions. Now, this is not financial advice, and you should always do your research before making any investment decisions. But the story of Sterling Infrastructure is a perfect example of finding a massive opportunity hiding in plain sight. It's a bet on the tangible, the necessary, and the things everyone else overlooks. If you want to stay ahead of the curve and find more of these undiscovered stocks before the market catches on, make sure you subscribe and hit that notification bell. Thanks for watching, and I'll see you in the next one.